Hey everybody, it's Clayton coming back with a brand new video. As you know, the market's been all over the place. And I know I've touched on this before in a previous video, but I really want to dive into it today. And it's going to be the main topic, as you saw with the title of this video, is going to be going over dollar cost averaging. And is it really the right thing to do? And this is a few months back. I saw this on Reddit and I've seen other people talk about it, but I really wanted to bring it up to you guys for anyone that's kind of getting into the market, wondering if they should invest right now, especially with as volatile as it's been, and kind of all of the above. So before we do that, I just wanted to kind of look at what the Dow has done. And as of Monday, we were sitting just below 2,500, so we're at 24.9. And then yesterday came the 12th, today is the 13th, March 13th, and it dropped 15.18%, which is a huge drop for in a week. And a lot of records that people don't want broken were broken when it came to the fastest time for a market to reach bear market. And there's just a lot that has happened recently. And then today we had a pretty sizable bounce back. And now for the week, we're only down 7.23%. So it's still a loss. It's still something nobody ever likes to see. But I'm still sticking with the exact same thing I've been saying since day one. The market itself, though it'd be nice to see a positive in my gains, the end goal is still dividend investing. And I really wanted to go over two other items I added to my portfolio, and one that I've kind of changed and weakened just for a short time. And I want to focus on the weekend one first. So you'll see in my portfolio, I've been hyping up and speaking highly of Carnival for a long time now, and I still believe in Carnival a lot. I just think coming down the pike. Oh, by the way, let me explain what's at 1%. The only reason it's at 1% is because I wanted to get, and I'll go into Walgreens, Boots, and Alliance in a second. I didn't want M1 Auto investing into Carnival right now. I'm happy with where I'm at. I think we're going to see some more bad times coming with Carnival, and the stock's going to continue to fall. Yes, it went up a little bit today, but now with them announcing that some of their cruises are going to be shut down basically for 60 days, it's going to be something that you're going to want to monitor. It will not shock me. I'm saying this now. This is March 13th. It will not shock me, and I expect them to cut their dividends. That there's no question about that. The dividend, I think, right now is sitting at like a 12% dividend. They're not going to maintain that. They are losing too much right now, not being able to sell, and I'm expecting a dividend cut. I don't think Carnival is something I'm going to sell even when they do cut their dividends. I know that's something that's kind of odd to say. Usually as a dividend investor, you don't like to see dividends cut, and that's usually when you get rid of them. But I think they've got a very bright future. I think they will cut their dividends, which will be unfortunate, but I'm going to hold on to them because I'm almost certain that their dividends will be back up to where they are today, if not substantially larger in the next few years once all of this passes over. But one of the stocks you can see on here is I purchased the Walgreens Boots Alliance, and let me go into that specifically. So Walgreens Boots Alliance I've been looking at for a short time, and for those of you who don't know what it is, I'd be kind of shocked, especially if you live in the States. There's Walgreens all over the place. And with what's going on right now in the news, and just in general in this country, Walgreens are a very high provider when it comes to medication. Right now, obviously their valuation has dropped. They're sitting at a 4.46 dividend yield, which is really good. And their payout ratio is only 31.28. So that's why, excuse me, why I wanted to get in with them. Because I've looked at them for quite some time, and their stock has taken a hit recently. But let me show you where they were as of, let's go just a month ago. A month ago, they were trading at $53. Now they're down to, well, the low when I bought yesterday was 41. So they've had quite a drastic little drop off. But this is a stock that I don't see anything happening to. And it's kind of a boring stock for most people, but I don't really care if it's exciting or boring. I pick up a stock because I trust them. Again, they've had their dividends paid, the growth for 43 years. Let's look at their history. You can see through their history, they continue to grow. Even in the rough patches that there's been through the economy, they've always continued to grow their dividends year after year after year after year. So that's why, to me, this is a home run, especially at the value that I was able to get them at. Even at 46, I still really like them. And I just do not see them cutting their dividends anytime soon. And yeah, it's a great buy in my opinion. Again, I'm no financial advisor. This is strictly for entertainment. Please do your own research when it comes to that. Another stock that I really wanted to get into, and people may be confused by this, we go back to my portfolio, was I actually, and man, do I wish I could move without having to reset my portfolio, but because I would put my Carnival in here, I picked up some Delta. And the reason I say that with Delta is, yes, obviously we've all seen their stock has taken a beating with this situation that's going on. It was at 58, and now it's all the way down to 38. It went up a little bit today. It was down all the way to 33 when I bought it. And they're running into problems because nobody's traveling. And yes, their dividend growth is minimal when you look through their history, when you look at their all-time. But they haven't been paying dividends for that long. So that's kind of where the dividend growth kind of throws off. They've only been doing dividends for 6 years, and every year they've done it, they have raised their dividends. Now, they haven't gone through a financial crisis. Like, they weren't giving out dividends back in 2009. So who's to say what they will do when they face that hurdle? It's not something they have in the past. But when you look through their balance sheet and you look through, they've got a very strong balance sheet and not a lot of debt. And their pay ratio is only 24%. So they've got plenty of wiggle room to pay out their investors for the short term. Because to me, and I think anybody else, flying isn't going anywhere. Delta isn't going anywhere. Yeah, they're taking a hit now because of what's going on and people are afraid to travel. But that's going to subside over some time. It may take a few months. It may take a year or two. But we see what is going on with them, and we see how they will probably bounce back. And they're one that I feel safe with when it comes to travel. Carnival, like I said, with them canceling their cruises and being 60 days of nothing, I can easily see them falling more and more. And they're going to slash their dividends. I'll be shocked if they don't. But Delta is one that I really like. I've liked for a while. And at the value, I thought I couldn't pass it up. Now, the main purpose of this video, and I addressed this before, let me get back out of here, was I want to talk about dollar cost averaging. Because I've been seeing in all the Facebook groups I'm in, people are saying, I'm new to investing, when should I buy in? I'm new to investing, what should I put in? I'm new to investing, what should I do? Or should I buy now? Should I buy later? Should I hold? And the one thing I would say is, first off, to anyone that's brand new to investing, what I would recommend is take your money and whatever you've got to spare. Let's say you want to invest $500. Split that into, let's just go with a fourth or maybe even a third, and invest that today, or invest that tomorrow, or today's Friday, so invest that Monday. And then maybe in a month from now, do another part of that third, or whatever you break it into, and then repeat that a month later. That is what I would recommend doing. Again, not a financial advisor. I'm going to repeat that over and over again. But to me, it has been proven through an example that I'm actually about to show on screen of something known as dollar cost averaging. I've talked about this in the past, and I mentioned at the beginning of this video. Dollar cost averaging is basically when you invest equal amounts of money into the market at regular intervals. So you've seen, if you followed my portfolio before, I'm depositing $125 every 2 weeks. I have, while the market's been kind of dropping, I have put more money in, and I've shown this, and just like I did that, I put $500 in because I had a little bit extra I could spare to make a buy. But I'm going to consistently be putting in my the money that the $125 every 2 weeks. And I don't care if the market's its highest, lowest, on its way up, going down. It does not matter. I will continue to be putting in that $125. It sounds weird to say that because you always see people trying to time the market and buy it when it's at the bottom, or buy it when it's at mainly buy it at the bottom. No one tries to buy it when it's at its highest peak. But there was an example created by Personal Finance Club, and they did a really good visualization of it. And I want to show you guys a breakdown of this because it really explains why dollar cost averaging is so beneficial and so important instead of waiting for the market. So let me pull this up. So we've got 3 friends. And you can see these friends. It's basically, the title just says how to time the market. And I'm going to kind of read off the screen, but I'm going to give a little more detail. So this is a story of 3 friends who all saved $200 per month and invested in the S&P 500 index fund. This is somebody went through and ran all of the numbers when it came to the market from 1979 to 2019. So somebody went through and took the whole market and did the extremes of if somebody had caught the market at its lowest peak and invested, its highest peak and invested, or someone that just continuously invested the entire way through. And as you can see, it says each saved and invested over the last 40 years, but they had different strategies on when to jump into the market. Now, major market crashes. Tiffany and Brittany knew the market could be volatile and planned to avoid the crashes. Tiffany is the one that we're going to use as the example of somebody that unfortunately always bought when the dip was at its high, or when it was at its highest, right before a crash. And Brittany was the opposite. She always knew how to time the market and bought it the perfect day right when the market started to bounce back. But their 4 times that they invested were during Black Friday in 87, the Kuwait War, the dot-com crash in 2000s, and the financial crisis, that was 2009. That's when they put their money in. So we'll take Tiffany, for example. Tiffany saved $200 per month in her savings account, earning 3% interest while she waited for the perfect time to invest. So every time she wasn't investing, she simply left the money in. She was putting $200 per month, some dollar cost averaging essentially into her bank account with that 3% interest. And then as you can see, but it turns out Tiffany had the world's worst timing. She dumped all of her savings into the market the day before the 4 biggest crashes in history. But she never sold. She held it continuously. Even with getting it, and this is why I like to be a long-term investor, specifically a dividend investor, because you're reinvesting in the market, getting more stocks, and just continuing to grow. But this is just talking about somebody that holds it all together. So even with her terrible timing, thanks to her buy and hold strategy, Tiffany turned $96,000 into $663,594 from just simply putting $200 into her savings account and buying at the worst times ever. Now, Brittany is the opposite. She had it perfect. She timed the market perfectly. She bought just as the market was just about to peak as it hit its bottom. You can see the same thing, save $200 per month, waiting for the perfect time to buy. And then every time she invested, it was always the day she bought, the market was at the very lowest after each crash, and then it started to bounce its way up. After that 40 years, she then had $956,838. So obviously, when she was able to time the markets, this is an example you can't really do this, but hypothetically, she made roughly $300,000 more than Tiffany, who was unfortunate and bought when the markets were all at their highest before they crashed. Now, this next part is why I want to show you why dollar cost averaging is perfect. And for anyone that says, I'm waiting for the market to bottom out, this is where the problem kind of lies. You see, she made a lot of growth on $96,000. Don't get me wrong. That's amazing growth. That's almost 10 times her investment. But let's go with Sarah. Sarah is the person that did dollar cost averaging. Sarah didn't have much to invest in or interest in watching the market or trading. The only thing she kept doing was every month from 1979, she auto-invested $200. And again, this is into the S&P index fund. But she put $200 in every single month. And you see, she walked out of there after 40 years of $1,386,429. So by doing dollar cost averaging, yes, she hit the lows, but she also rode that wave up during each high. She wasn't sitting holding money back, hoping that she can time the market correctly, because it's been proven time and time again, it is almost impossible to time the market. I'm not going to say it's impossible to time the market because there may be an example of someone that has done it in the past. I have never heard of anyone doing it. Every investor that you will ever hear of that is somewhat famous for how good they are as an investor and what they do will say the same thing. You can never time the market, but I'm not going to rule out that maybe somebody has once done this. So I'm not going to say it's impossible, but I'm going to say nearly impossible. And it's kind of something I don't think you could do if you tried. But you can see with her, she wound up making over $40,000 or $400,000 more than Brittany, who was the one that hit him at the perfect time. She bought in perfect time, held her money, bought in as the market was at its lowest every single time. And yet she was buying stocks when it was going through its best times, worst times, during the crash, the lowest part of the crash, all of that. And she still made out $400,000 better than someone that was able to perfectly time the market. Now, obviously, if you compare her to her other friend, Tiffany, then that's a whole nother story. She's nearly got $1 million more. It's like $700,000. But that wasn't really the point because, again, the argument, no one actively wants to buy as the market's about to crash. It's always everyone trying to hold for the best time, the best place to buy, what is the best value. And the final thing I wanted to show is here's just a graph that represents it. And this quote from Personal Finance Club to me explains it perfectly. You see, remember, time in the market beats timing in the market. Invest early and invest often. For anybody that's questioning when they need to get in or when they should get in, the answer to me is now. If you would ask me this question 6 months ago, the answer to me then would have been then or now at the time. If you'd asked me this a year ago, now would have been the time. Now, this is speaking from someone who waited to get in the market. It's like pot calling the kettle black on this one. But eventually I started to realize the longer I sit back and wait, the more opportunity I'm missing. So if you're in the boat and you're trying to hold the money and say, I'm going to wait for this to bottom out, I think you're making a giant mistake personally. Again, everybody has their own opinions. Everybody does differently. I'm simply speaking from someone who is a long-term investor and a dividend investor that is going to hold these stocks for, the example shows 40 years, and it's very likely that I hold the stocks that I purchased for 40 years. Unless something drastic happens and I need to sell, or one of them just completely changes their model and they're no longer valuable, then yes, then I will get rid of them. But the ideal reason for buying these stocks is to hold for the rest of my life and to even pass on my earnings to my kids and all of that. So if you are curious as to why dollar cost averaging is what a lot of investors talk about and not trying to time the market, I hope that little slideshow really demonstrates and shows why it is so important to do dollar cost averaging. I'm not trying to convince you to do it if it's something you don't want to do and you just want to hold your money and time the market and try to time the market. But there's so many examples of it, of people trying to hold the money, waiting, unfortunately, too long for the market will bottom out. And then it's usually the next day or so, or the next week, is when the best recovery happens. And because people held out and they're waiting for the market to bottom out, they miss that window and they miss the greatest growth when it comes to their stocks. So if I had one thing I could share to anyone that's watching this, dollar cost average, dollar cost average, dollar cost average, abbreviated DCA, DCA, DCA. I have harped it in other videos, but I really wanted to dive in and break it down for this one specifically. It's what I'm doing. It's what I know a lot of people do, be it the Warren Buffetts of the world. Like, literally, you can go through and name anybody that's a large investor, and they'll almost all tell you to never try to time the markets because it cannot be done. They're too volatile, and there's just no way to time it. So I hope I was a little bit more informative in this video. Usually it's more just, here's my stocks, go over a little bit of news. Obviously, we know what's going on. Please, everyone, stay safe. I'm here in Florida, and it's kind of starting to pick up now. But I want to thank everyone for watching. If you liked the video, please give it a big thumbs up. It helps the algorithm. It helps reach other people. If you're not already subscribed, feel free to subscribe. And as I always say, comment below. I always am loving interacting with you guys. I think I'm now at 75 subscribers. I hate saying this in every video, but I love saying it in every video because I really can't thank you guys enough for the growth that has happened. I feel like I'm always just kind of kissing up to the people that watch this channel, but I'm really not. It's really something that I am speechless about, and I appreciate it. I really do. I don't have any goals for 2020. I'm not like I need to hit 100 subscribers by June or something. Like, there's no goal for me. I've already surpassed the goal I wanted. I wanted to have over 50 subscribers by the end of this year. I started this channel the end of January. It is March 13th, and I'm already 150% past my goal. So I'm speechless when it comes to that. I really thank you guys. And as I say at the end of some videos, if you have any questions, email me personally. I only give this out at the end of my videos because, see, if you want to watch all the way through, I'll gladly reward you for doing so. My email is Clayton, ClaytonS, so Clayton's Cash, CASH, 89 at gmail.com. Again, that's ClaytonSCash 89 at gmail.com. So for anyone else that's still here, I really do appreciate it. Thank you so much. If you'd like to share this video with friends, that's always loved or appreciated as well. I hope you guys have a great weekend. Stay safe. And if there's anything I could say, just enjoy the ride. We're going through history right now with this. The bear market's finally here. And obviously what's going on right now is something that's unprecedented in our history, at least since I've been alive and my parents have been alive. I'm 30 and my parents are in their 60s now. So yeah, I'm now rambling, but thank you guys so much for watching. Truly appreciate it. I hope you have a great rest of your day and a great evening.